did a halftime report today from the exchange,
I watched you.
and Scaramucci came on.
Yeah, I saw that. He's loving life now, finally.
You know what, man? I give him a lot of credit. He puts himself through like a lot of booms and busts.
Yeah.
Like he's like always in a fight.
Who are you talking
And
about?
Scaramucci. And
We had
and
Anthony on we had Anthony on halftime today with his new Bitcoin book.
He's a humble guy. From when I say humble guy,
Yeah,
he acknowledges
elaborate.
he acknowledges his mistakes. He acknowledges when he gets beaten up. He's got a self-deprecating humor.
Yeah,
From
all right.
that perspective.
So I don't know that. I don't think humble is the right way to put it.
Yeah,
but I do think he's more honest about everything that goes wrong.
Admits his mistakes.
Yeah, actually, that's a really good point. I put him in my new book.
Yeah,
like it's not about him. I talk about something that happened at the SALT conference. All good things. But then he's also in a chapter about the crypto mania during the pandemic. And just like there was this moment where there were like 8 people who completely dominated the conversation because of how online they were.
Right.
He's in that group.
Yeah, he definitely threw himself in.
It's him, Kathy Wood, Dave Portnoy, Pompliano is in there.
Yeah.
Musk is in there. Saylor, not yet.
Yeah.
Trying to think. Kevin O'Leary, Mark Cuban.
Right.
So you remember that moment? It was like it was more than a moment. It was like 18 months when
FTX was on the rise.
Right. So every day the market would open, and it was SPACs and crypto and rockets and that it was like. Right. And there was just like these people that built these huge audiences.
That was your type of market.
Yeah, you love that. Anyway, I was off Twitter at that time, but people were sending me links every day. And I don't mean people like that work in the business.
Right.
Like
just randoms?
Friends of mine who sell insurance or fix cars. They would send me these clips of these people that I know in real life, and they'd be like,
"Yes, what do you think?
Is this right? Or should I do this?" And I would just be like, "Oh,
yeah,"
because I took myself away from all that to not be exposed to it, but it was so big,
and it was telling about the sentiment when they're doing that.
Twitter was just such a center of the universe in that moment because there was nowhere else for people to talk.
John, did you grab that clip?
So I had a similar experience in '99 when I had college friends that were not in the business asking me if they should be buying Sun Micro.
It was the same thing. It was just like it was exactly like that.
Yeah, of course.
Peter, you're like this. Speaking of sentiment, I was talking to a friend of mine this morning. He's like, "So what are you doing with Bitcoin?" I'm like, "I have my sell orders on the way up." And he's like, "Why would you do that?" And I was like, "Because I want to sell on the way up. I have enough Bitcoin. I don't need more." Like,
you mean as opposed to never selling,
right?
like
as
the others?
It goes up, it's just gonna become bigger and bigger in my portfolio, and I already have too much. He's like, "But I feel like it can't go down." I'm like, "Dude, now you're making me want to sell everything."
I feel like it can't go down. It's awesome.
Like, should I sell everything right now?
Oh yeah.
Like right this second.
Even the bulls say it can go down, and they want it to
because they want to buy more.
They want to buy more.
I've also heard from 3 people in the last 2 days that are just waiting for a pullback. Now, what do you do with
buy more? Or
no, just to get in, just to get in,
right? Just to get.
And I feel like there's so many people. Now, none of this is actionable. Who the knows? But there's a lot of people that are like, "Oh, I'll buy it on the next dip."
So I was telling Mike, Saylor obviously is now on TV every day, and
he's in New York. He's in New York this week, and he wrote the foreword to Anthony's book.
Oh, so that's why he's getting a lot of press. Okay.
So 2 nights ago, Barry was at the Anthony's book party, which of course Hunt and Fish.
Yeah,
all the crypto people were there. Like Tom Lee was there. All the Wall Street meets crypto crowd, like the people that are, I don't know what Barry is doing there actually. All the people that are in straddle both worlds were there. So I think that's why Saylor's been doing a lot of TV appearances.
That explains. And also all the converts that he's selling.
Well, that helps.
His argument has shifted from the real benefits of why Bitcoin was created and why you own it to it's going up and I'm buying more, and it's going up and I'm buying more, and it's going up because I'm buying more. Like now it's all a price thing.
Well, wait a minute. He pitched Microsoft.
Yeah, I heard that.
Treasury.
To keep it as a reserve.
And they might actually do it.
Yeah.
And somebody sent me a link to their Substack that wrote it up. He wrote like thousands of words on Microsoft actually is going to do this.
And just focusing on the fundamental benefits of owning it.
No, it's like, what does it
Or-
cost Microsoft? What does
it's
Microsoft
nothing.
have in its corporate treasury now? $200 billion?
Yeah, something.
So what does it cost them
Can you
to
imagine?
say we bought 10 billion worth of Bitcoin?
Right.
First of all, they would be making the price of their Bitcoin double in saying that. Second of all, let's say it gets cut in half. Oh no.
Who cares?
Yeah.
Who gives a shit? We're Microsoft.
So if they announce that, what happens to the price of Bitcoin?
I think 150, my opinion.
Yeah, it's
Because here's
crazy.
all right.
They should be buying Mickey Mantle baseball
Apple
cards.
made a Bitcoin announcement. Apple said, we are partnering with Coinbase. I think Coinbase made the announcement.
Right.
Apple Pay and Coinbase are going to work together so that now all of these people, there are 50 million people in the United States alone that own crypto. They have greatly appreciated crypto. They want to be able to use it to pay for things. Makes perfect sense. Why wouldn't
until
you?
they get the tax bill on the capital gain that they realize when they sell it.
Schmaxes.
But Apple is considered the gold seal of approval in privacy and safety and security amongst the American public.
Yeah, trust. Definitely.
Trust. If they are now putting out press releases and productizing Bitcoin solutions, what would be holding Microsoft back? And remember, the number one thing that matters in 2024, going into 25, is if you're perceived as being cool. Jensen Huang wears the leather jacket. You have to be cool. It doesn't. Mark Zuckerberg is so swaggy at this point.
Yeah, he's got the necklace.
It's like out of control. He relaxed the Jew fro.
Yep.
So they all want to look cool. So when you think about all of these things, what would hold Microsoft back? I can't think of one.
Yeah,
Lack of interest is the only one.
Yeah, I agree.
Now, if Saylor can convince Satya, buy $5 billion worth of Bitcoin, who cares? Just do it. Just do it. Just do it.
Right.
You're going to have every treasurer in the Fortune 500 is going to have to explain to their board why they're not. Think about that's how this world works.
Right.
It's
all follow each other.
Right. It's a copycat world, and the higher you are, the more risk you have in not doing something. Like, imagine if it works.
Yeah, and that's what he's created is you're an idiot if you don't buy it, essentially.
Right. So Saylor is like willing this into existence now among very high level people.
But I did listen to you guys, your pod this week with Bianco, when he talked about, that $13 million price target and what that would mean relative to the rest
every
of the
other
economy.
asset market has to crash.
Yeah, I mean those were great stats.
Yeah. I don't have a price target of Bitcoin, but I don't.
Who knows?
But if I did, I don't think it would be 13 million.
But you also made the right point.
Which
when
one?
You said, well, if you can create Bitcoin, can't you just create another
That's not
thing?
a good point, though.
Yes, it is. It's the best point.
How is that a good point?
Because if something goes to the point where it costs 13 million to buy one of them, somebody else will invent a substitute for it that's good enough for the price of $13.
That's a horrible argument.
It's
You
not.
don't have to spend $13 million for a Bitcoin. You could buy $4 worth.
It's not. Why is it?
The higher the
why is it a horrible argument?
Because the higher the price goes, the more the story gets validated. You can't just create something.
Well, what do you think Bitcoin did?
What was Bitcoin competing with? Oh, really?
They
That's
just
your smart
created
argument?
it. They just created it. Yes, that's my argument.
Okay, so what's the second Bitcoin?
I didn't say there was
like
one.
I said,
No,
Mike,
you could just create one. Oh, yeah, so do it, smart guy.
you can tokenize a
they
Van
just
Gogh.
created it to begin with. It's not naturally occurring.
I mean, but that's such a weak argument because you could say that in perpetuity about a lot of things.
But in a lot of things, there is a new version that gets created.
Bitcoin is the ultimate narrative asset, and you can't just create a story. This thing has been going on for years, and you
15 years?
You can't just snap your fingers and create something else.
Sorry, there are companies that have been around for 150 years that go bankrupt. That's not a great argument.
Okay, but I'm not saying that Bitcoin is going to be the king in 150 years, so that's also a bad argument. I'm saying today it's the king, and you can't just snap your fingers and create another thing.
But that's just fundamentally untrue. It happens all the time in every industry. You absolutely can fundamentally.
It's such a
create
straw
new
man
thing.
argument.
Why?
Like, 'cause how could that be disproven?
You can't disprove it because this is the way the world works. It cannot be disproven. The only thing
So
you
if
could
Bitcoin
say
goes to $1 million, somebody's just going to create Bitcoin too?
No.
and succeed?
No, Solana might succeed. And people might use it for the same reasons. And people might just say, Coke and Pepsi. I mean, this is so obvious to me.
And technology allows you to create something at a very low cost.
The success. I'm not saying it'll supplant Bitcoin. I'm saying if there are two of them, then the first one will probably not have as much of a premium as it would if it were the only one. And so there's an incentive built in for people to find a new way to do what Bitcoin does, but with a different vehicle. Of course there is. All you have to do is look at the history of
Bitcoin.
No, every invention that's ever existed, every corporation, somebody eventually comes along and says, that's awesome. Here's our version.
But Bitcoin is a narrative.
So I was telling Mike before, a 1968 Mickey Mantle, you can't make it anymore. It's finite in nature.
Yeah.
It's unique.
Yeah.
You can tokenize that. Someone can own 5 to 10% of a particular card. You can trade it 24 hours, 7 days a week on some exchange. And it's...
Can you get laser eyes?
But I'm saying, what's the difference between owning that and that card?
But it doesn't matter. It's belief. It's belief. It's millions of people believing.
I have a different take, though. The Mickey Mantle card is finite. They can never go back in time and remake what they did. Okay. But here's the thing. If that's sitting on the table by itself and it's the only option, assume it has the maximum leverage, the seller, like this is all there is. But if I put that on a table and I say, here's Ken Griffey Jr. rookie card also, here's Michael Jordan rookie card, here's Patrick Mahomes rookie card, now all of a sudden it's like, oh, you know what? I would have paid $100,000 to own but actually I would pay $20,000 to own that instead. There was MTV and then there was VH1.
Well, that's my point.
There was MySpace and then there was Facebook. This is not complex stuff.
But all those things can compete with Bitcoin. Microsoft can say, I'm going to own a lot of unique assets that can't be printed.
Not just one.
Not just one. I can have a treasury of all the best football player cards or baseball player cards.
What Bitcoin has done, it's created a halo and an affinity of tens of millions
of
people.
Agree.
It's its own
and you
story.
can't just replicate that.
You can't
it's
replicate
not a tech
it.
Story.
You can't replicate it. You can come up with an alternative to it. It's two different conversations.
But it's not like there's not altcoins trying. I mean,
I
there's
agree.
thousands of them.
And the odds of none of them ever succeeding are low.
I'm not saying none ever. I'm saying like today.
Today, there is no other Bitcoin.
Yeah.
We're not arguing about that. What you're saying, though, is that the success of Bitcoin can become so extreme and no one else will come along and say,
I'm saying
here's a new finite
I'm
asset.
saying Bitcoin's success has created a very wide moat that is hard to penetrate.
100% agree.
Just the network effect.
And you know how we know you're right about that?
Because look at the price.
Look at the valuation. Yeah. There's no close second. Historically, how likely is that to persist forever?
That's the thing. Is
extremely
something
unlikely.
That's 15 years old. I mean, for me, Bitcoin right now, if it was created to be similar to gold, it should trade like gold.
Which it wasn't, by the way.
Well, theoretically, you can say, okay, the central banks can't print it. There's a limited quantity. It could be a store of value. I mean, there are similar characteristics that back Bitcoin relative to the bull case for gold.
The Satoshi white paper said nothing about this should be a 1% sleeve in people's asset allocation at Fidelity.
Peter, did you hear Jerome Powell say that Bitcoin is digital gold yesterday?
Yeah, and it's just a speculative instrument like gold.
As a gold...
Gold's been around for 5,000 years, and it's just some speculative thing.
What he actually said was it doesn't compete with the dollar, it competes with gold.
Yeah.
And I think he's right.
Yeah.
That's what he said.
Yeah.
Functionally.
But it hasn't really traded... I mean, it's traded more like the NASDAQ than it has with gold.
All right, odds of gold flipping Bitcoin in terms of market cap in the next 10 years.
Oh, I think that's going to happen in the next 6 months.
I mean, at this rate,
no. It's like isn't gold like 17 trillion versus a trillion? It's not gonna happen in 6 months.
No,
what's
I think it's more like 10 to, well, now it's probably 13, 14 trillion with the recent rally in gold.
So gold market cap is
I'm
gold market cap is.
I'm talking about the ETF. Oh, we're having different conversations.
Gold market cap is 17 trillion. I'm not talking about ETF assets.
I'm saying like gold miners and ETFs versus Bitcoin ETFs and Bitcoin publicly traded companies.
That's guaranteed to happen. It might happen already. That might already be done.
I think that happens in the next 6 months.
I'm saying if Bitcoin is $1 trillion, is that where it is, give or take, maybe more?
Yeah, I think it's probably more now.
More now. The odds of it passing gold has a 17x head start over the next, call it, 20 years.
I mean,
make it up.
If central bankers start buying Bitcoin, then sooner rather than later. If central bankers who own most of the gold are not going to use it as a reserve and Bitcoin remains just some speculative thing, I don't see it happening. I think it has to be accepted, not just BlackRock's ETF. It needs to be accepted in the world of gold, which is central banks, which owns a lot of the gold that's out there.
Well, a good starting place would be if corporations like Microsoft
Yes, that can accelerate
decide
the acceptance.
this is something for strategic, not because we're speculating on price, but for strategic reasons. We want to have a portion of our, they're not called reserves on a corporate balance sheet, but for
Cash and
practical
cash
purposes,
equivalents.
right. We want to diversify away from all sovereign currencies and have a currency that's native to the internet. Then they would not, to Michael's point, there is no other digital asset in contention. It would only be Bitcoin or not Bitcoin.
So
People are
Fidelity,
pitching gold, digital gold, in the sense that if I store gold and you have a bank account denominated in gold, you can trade digitally your ownership in a gold bar, for example.
Right.
Now, that's not taking off, but Microsoft can do that as well.
You know what I thought we would see more of? I thought the strongest argument for tokenization are big illiquid assets that are very widely held that people wish they had more liquidity. So
like buildings.
And that are
Buildings.
scarce.
Yeah.
So I thought all right, so let me give you a really good example.
Before you do that example, so Fidelity, Fidelity, BlackRock, and Bitwise, their Bitcoin ETFs are already equal to GLD.
Yeah. I'm
Yeah,
not, all right,
it's
so then,
Wild.
so then I made a prediction about something that already happened.
Unbelievable.
All right. So I was right. The Empire State Realty Trust, ESRT,
Tokenized.
time out. It's a $10 stock. It's a market cap of $1.8 billion. Thought exercise. They announced tomorrow we are exchanging shares for tokens, and anyone who wants can tokenize own a piece of the Empire State Building. Tell me that market cap doesn't go to $4 billion for no reason.
And trade it 24 hours a day, 7 days a week.
Okay, so now you have all this real estate in Manhattan. Nobody has liquidity on most of it. Unless it's owned by a REIT, it's like some Jewish family owns the building and it never changes hands. The grandfather bought it and what if 10% of that building could be freely traded in tokenized form? It's not a corporation. It's just ownership in this building. That's how you unlock all this real estate.
But
Why is nobody doing this?
Doesn't that dilute, to my Mickey Mantle point, does that dilute the value of Bitcoin?
Well, so for me, it does.
Same with me.
Okay. Nobody seems to agree with us. Michael definitely
They don't
doesn't.
want your shitty Empire State Building. They want Bitcoin.
Yeah, but it's the point of owning something that is unique where you can't recreate it and there's limited value. I mean, it's still the
All right,
same.
let's start the show.
Yeah.
Agree to disagree.
Compound and Friends.
Oh, I get goosebumps when we do this
Episode
part.
168.
Today's show is brought to you by Astoria, my former hometown. Astoria Portfolio Advisors. Astoria Advisors is an outsourced CIO firm managing roughly $2 billion in assets. They also offer a unique ETF for investors looking to diversify away from the Mag 7 and play a broader market rotation. The ticker is ROE. That's the Astoria U.S. Equal Weight Quality Kings. They invest in 100 of the highest quality large and mid-cap U.S. stocks, equally weighting its constituents. We spoke about ROE today, not in the context of this ETF, but return on equity. So like the ticker. For more information on ROE and Astoria Advisors, you can visit AstoriaAdvisorETFs.com/ROE.
That's AstoriaAdvisorsETFs.com/ROE. That's right, ladies and gentlemen, we're back. We have a very special show for you today. We have a returning champion making his third appearance on the Compound and Friends. Every time he comes, we have so much fun. And we always learn a lot. And for me, just me speaking personally, Michael doesn't have to agree with this. Peter is one of the people that I have learned the most from about how the macro economy works, how markets and macro are interrelated, what to pay attention to, what to throw away. This is my guy.
Wait, can I say, hold on, it's true. In Slack over the last, we've had Slack for a long time, early adopters, credit to us. He drops you from Boockvar all the time.
Thank you,
Obsessed.
Josh.
It's
So,
true.
Thank you.
as the kids say, obsessed. Peter is the CIO at Bleakley Financial Group, an RIA with over $10 billion in AUM. Peter also manages a global macro and income strategy for clients. Peter, welcome to the show. Thank you so much for coming back.
It's great to be here. Thank you so much for having me.
Can I play a clip?
Yes, let's
All
do
right.
it.
Let's drop the energy down real low, real quick.
That's not working. Turn that up.
Can't. Hold on.
Oh, there we go.
It's this?
Yeah. All
Oh,
right, start it
wait,
over.
wait.
Start it over.
All right.
Here we go.
All right. Peter, can I play you a clip?
Yes, let's
I
hear
have
it.
been blessed in all my life in Wall Street to see that, to learn things, to learn that to be good at this, you've got to be a detective. You've got to be able to put together things that don't fit. I mean, there were comments here about we're flooded with financial news now, TV and whatever. And you will see a lot of people just need to fill up time, and they will say things that sound reasonable on the face of it. The Dow was up 30 points today because non-farm payrolls were better than expected. Well, the Dow didn't start to rally till 2:30, and the non-farm payrolls came out at 8:30. That didn't fit. So to be a good broker, to be a good trader, you've got to learn to, okay, if that's the reason, what would the bond market be doing? Well, it's not doing that, okay? What would the dollar be doing? Well, it's not doing that. So that's not what's going on.
This is a truly great man, Art Cashin, who we lost a couple of days ago. Art passed away at 83 years old. For anyone that's tuned into CNBC at any point over the last 25 years, they've definitely seen Art on screen, either giving commentary or standing in front of 1,000 traders singing "Wait Till the Sun Shines" Nelly on New Year's Eve day. Art was the director of floor operations for UBS. UBS had acquired Payne Weber. He'd been there for a couple of decades. But Art had been on the floor of the New York Stock Exchange since 1959. He was, I refer to him as a national treasure. I'll never forget the first conversation I had with him. And I haven't really shared this anywhere, but he walked up to me coming off set for something I was doing for CNBC. And he said, "You're the real thing. Don't listen to these people. I've seen everybody come and go. You're the real thing." And I don't even know if he meant it, honestly.
He did. He didn't. He doesn't throw the. He
I
didn't
know
throw
he
those
was.
lines
I
out.
know he wasn't I know he didn't bullshit people, and that's why everyone loved him. He told it, but him saying that to me, and I was probably 34, 35, and I really hadn't made any money on Wall Street yet, and I really hadn't built a firm yet or accomplished anything. But I think he was a fan of my commentary, is the way he meant it. That was. I didn't need anything else. Like, that was it. If that guy thinks I'm the real thing, even if he only half thinks it, f everybody, I am. And God knows how many people he had done that for over the last 60 years on the street. So God bless Art Cashin. And I'm so glad you're here today, because I know you had a true friendship with him.
Yes, and I will say
What's
again,
the worst thing you ever saw him do?
The
I'm just kidding.
No, he didn't throw out lines like that unless he meant it. I mean,
Yeah.
he saw your passion, he saw your knowledge, he saw your conviction, and he didn't like the people that hemmed and hawed. He was a detective. He always was looking under the hood.
Yeah.
He wanted someone who had an opinion, and I think he respected that when he saw it. And Wall Street is one
How
of
did
those,
you meet him?
So I probably met him at just one of the dinners maybe Josh Frankel had or
Yeah.
somebody, 15, 20 years ago. And we started to swap our stuff. And I wrote every day and he wrote every day. And then we started
Cashin's comments.
And then we
Yeah.
just started a report and email back and forth. And he would
Yeah.
ask questions and we would chat about things. And then, the more I hung out with him, the closer we got. And he was a phenomenal storyteller.
The best.
And he was not a pretentious guy. I mean, Wall Street's filled with these arrogant, pretentious know-it-alls, and he just wasn't that. He came to work trying to do the best he could, trying to figure out what was going on in markets and try to help his customers.
Yeah.
And that was it. And he didn't bring any attitude to what he did. And he was just always a pleasure
Also,
to hang out with, because we can just sit here listening to him talk the whole time.
so never a 2-and-20 guy, never an investment banker. He never like remade himself. Art's been doing the same thing longer than anyone I can think of on the street.
He would have done it for free.
He would have done it right. He would have done it forever, and he would have done it for free. The first time you met him was at the Big Picture Conference.
Yeah, I remember that.
It was like your first day working
It
with
was
us, right?
2012, and I was overwhelmed. I couldn't believe the company that I was with.
Yeah.
I mean, he was like a rock star.
So Art told this great story, and this is one of my favorite stories of anyone's on Wall Street about why markets work and why you should take risk. He tells this story. I'm sure you've heard it a million times, but for the audience, Art loves to tell the story. He started in 59. So I guess sometime around 1960, 1961, we're in the Cuban Missile Crisis era. And one of his first days on the floor, the market's selling off, and he's running around like as a brand new, I guess he was a trader at first, or he was a runner. Okay.
Yep.
He's running around trying to get sell orders off. He's trying to sell stock. And one of the senior guys grabs him by the back of the collar and says, "Young man, where are you off to in such a hurry?" He said, "I'm trying to sell. The rumor is the missiles are in the air." And the guy says to him, "Well, you got to buy when the missiles are in the air." And he's mystified. What do you mean? It's the end of the world. And the guy very calmly explains to him, almost none of the time are the missiles actually in the air. And anyone who sold on that's going to be sorry. The buyers make money. And if they are in the air, we ain't going to be around to give a shit.
Exactly. Who's going to clear the trades if it's a true story?
Right. If you're wrong, if you buy and you're wrong, but the missiles are flying, don't worry about it. Okay. But that's so elemental to what we all do for a living. Like, obviously most trades aren't made under that level of duress, but that was a really instructive story for him this first month or two in the business. And every time he tells it, a new generation of people understand a bit more about how to do this. And I don't know, he's got hundreds of amazing stories like that.
He really does. And I know you were going to talk about another one with...
I want you to talk about it.
JFK, which he loved to tell.
He was Eskimo Brothers with JFK, Marilyn Monroe.
Right.
Is that the story? Or is it a different one?
This is a little bit different,
Okay.
but it's close. So he was shot 12:30 local time, so it was 1:30 Eastern. And all of a sudden on the floor, there's a commotion out of the Merrill Post, and all these sell orders are coming through the Merrill booth down there, and everyone's wondering, what does Merrill know? What are they seeing? And it turned out that Merrill, since they were big back then relative to everybody else, had an office in Dallas.
Right. There's no Twitter, and there's no Bloomberg, and nobody knows what happened in Dallas.
Nobody knew. This was those minutes before the news was disseminated. And a bunch of people in the Dallas office went to the parade. They wanted to see the president. And they were on one of the streets, and shots fired, and they all ran back to the office. And that's why they were the first ones to put in their sell orders.
Okay. I mean, it's like a throwback to another time where like somebody's messenger pigeon was faster than someone else's.
Yeah, exactly right.
That's crazy.
And that's how news was sent around back then.
Anyway, we just wanted to take a few moments to pay tribute to someone who's Michael said this the other day. I think this is an important point also. He has universal approval. Like Art Cashin. Have you ever heard anyone say anything other than how much respect and admiration they had for him?
Never.
There's nobody else on Wall Street that talked to 100 guys and they were all like, yeah, it's a great guy.
Yeah, even Warren Buffett has people that talk shit about him. I think he said this when he was done talking with Barry. What was the line that he said about ice cubes need marinating or something?
Well, that's his famous.
Well, yeah. So he had the Friends
line.
of Fermentation. That was the group that hung out at Bobby Vance after the market closed, and they were going to marinate ice cubes.
That's right.
So the Friends of Fermentation was not an official club, meaning one of the coolest things about Art, he would be on that bar stool right on the corner, directly across the entryway from the New York Stock Exchange at Bobby Vance, which I think opened in 2007 and then just closed.
Did they reopen it?
Closed.
It's going to
I
be
don't know if
something
it's
else.
reopened, but they recently closed it.
There's a Serafina now across the street, so if you like pizza. Tough place to have a steakhouse in the post-pandemic world because nobody works there anymore.
Right.
And I want to say this other thing. I think the pandemic was really tough on Art because that was the place that he went every day.
That was his family.
That was his family, and he had lost close family members in the years preceding that. But I think having that place to be and work and help people and actually be a part of what was going on each day.
His friendships, his social life, his family.
Yeah,
That's where
so
it was.
Shutting down the exchange for however long it was shut down for absolutely sucked. 9/11 was a moment where Art was really important symbolically. Seeing him back on TV from the floor of the exchange was way more important to people than seeing Dick Grasso.
Right, because it was
Like Mark Haynes was important and Art Cashin was important.
Art was like the mayor of the stock exchange.
Yeah.
And yeah, he was the go-to of how is this institution, how is the American financial and capital market system and American economy going to make it through? And he was a soothing voice during that time and explaining how life will go on, however horrific what we just experienced.
Yeah. So I think for most people seeing him on screen, it's just like, all right, things are getting back to normal.
Yeah.
All right.
And he spoke in plain talk. There was no complicated stuff. He was able to speak to anybody, whether you were in the market or not. Everybody was able to understand what he was saying.
I love that. Let's do some complicated talk. Rest in peace, Art Cashin, and our thoughts are with Art's family members and Judy and everyone else who had him in their life, in their professional career.
All right, let's start here. So Peter, I feel like you have a bit of a contrarian bent to you. I feel like right now we're living in a moment where a lot of things are consensus, right? Like price targets, dollar, U.S. exceptionalism. We're all, for the most part, on the same page. As we get ready to turn over a new page into a new year, what's on your mind for a potential contrarian trade in 2025?
So to your point, I like to look at the 52-week low list when I try to find stock ideas.
You and I are polar opposites.
Yeah. And I say that because I'm not good at buying high, selling higher. It's just, it's not my skill set. I'm not a good trader. I'm a better long-term investor. And where I can find like a long-term story and just sit and hold and block out a lot of the noise. I'm not good short-term trader. So I try to find things that are bombed out, but trying to not get caught in a value trap.
Like Bored Apes?
But looking for something that could be a good story. Okay, so contrarian idea that I've recently bought. Okay, so Bitcoin, gold, the metals, these rare assets. I recently bought platinum. So it doesn't sound very exciting, but when you look at platinum is historically always traded above gold. Gold's now 2,600, platinum's about 950. And the reason platinum was bombed out is because everyone thought that EVs were going to take over the world. Therefore, you did not need an internal combustion engine. You didn't need a catalytic converter on that car, which limits the emissions. And who would buy platinum or palladium if we all went to exhaust-free cars?
Are those two things exchangeable or no? Platinum and palladium.
So
I know they're not the same thing.
They somewhat are, but about 80% of the usage of palladium goes into a car. Only 40% of platinum goes into a car. Platinum has more uses in electronics, jewelry, wedding rings, whatever. So that's why I like platinum better, less exposure to autos. But we're realizing that in the VHS Betamax war, hybrids are winning out. And hybrids are still going to use palladium. And in fact, some of them are using platinum, more platinum than internal combustion engine because of the heat to cold, cold to heat type engine that is part of that. And platinum is also going to some of these batteries. So here's something that's bombed out. I know it doesn't sound very contrarian, like sexy-wise, but I said this year. I thought China was going to outperform the U.S. Going into 2024, I said the Hang Seng's going to outperform the S&P. And for a short window after China announced those steps, we were there.
You doubling down?
So what interests me about China, and I'm a bleeding heart libertarian. So from the government perspective, the authoritarian nature, the crackdown on entrepreneurs, it's everything I am against. But
Strong buy.
the entrepreneurial spirit in China happens in spite of that. You know, the Alibabas, the Tencents have been created in spite of that. And to me, a very exciting economic growth story, and I said this last time I was on in March, is this growing middle class in all of Asia where half the world's population lives.
Yeah.
I'm talking about 4 out of the 8 billion people live there.
Wow.
And to me, as they get wealthier, as they go from the lower to the middle class, they want to live life like we do. They want to go out for dinner and they want to travel and they want to buy Hermes bags and they want to do things that we do here. So that's what I want to play into. And when we know the U.S. markets, because particularly big cap tech has sucked all the oxygen and money out of the rest of the world.
70% of global equity market cap is now U.S.
Right,
wild.
with about
crazy.
25% of global GDP.
How about
And-
10% of the population
Right,
or less?
less.
Yeah.
So when the switch is moved or some mean reversion, the pendulum swings in the other direction, it's not shifting to Europe. Europe has got its own trouble. It's, I think, going to shift to Asia. And I'm not saying play it through China, but you can play it through any business. You can play it through American companies that sell into China.
Sure.
Estee Lauder's business has been hurt by the slowdown in China travel and spend. So there are American stocks you can buy that play into that, but anything that can benefit, because the sentiment towards China and that entire region, people just don't care. Now, India's been exciting. India's market's done very well, so I shouldn't paint that with a broad brush. Indian market's done well.
Japan has done well.
Japan has done very well.
Argentina's been on fire this year.
Argentina's been tremendous with Malay. So I do think that there are opportunities outside the U.S. Now, the question is, okay, well, are people just going to wake up one day and say, hey, I want to buy a stock in Asia?
Something has to happen.
Something has to happen.
Yeah.
And, you always think about, well, what would disrupt U.S. markets just generally? And to me, the two things, if they were to happen, I'm not saying that they are, is if there's another wave of turbulence in the treasury market, and it's not just the U.S. Treasury market, it would be JGBs, it would be European bonds. Is it because the BOJ is going to hike rates, or foreigners revolt for whatever reason on U.S. Treasuries, and the 10-year yield goes to 5.5, the German Bund yield goes up? Because I look at, people talk about, well, where's the excess in markets now? Where's the bubble that would sort of deflate, that would cause us to fall back? And to me, I always go back to when we had $18 trillion of negative yielding bonds. That was the biggest financial bubble in the history of bubbles in terms of dollars.
Yeah.
Because
Nothing was ever that big.
The world converted an asset, that being a bond, into a liability because you had to pay interest by owning that bond.
Yeah.
It was insane.
Yeah.
And the question is the bond bear market over? Was it just like a couple of years? 22 was a bad year for those people owning long duration, and that's it, and we're fine. The Fed's cutting rates. Rates are going to go down across the yield curve. Well, we saw the Fed's cut 75 basis points and loan rates didn't fall. So that's one thing I'm watching. Whether it happens or not, I don't know.
The palladium?
But that would be the risk.
What's the platinum trade?
So Aberdeen has an ETF that you can own.
Is it on the metal or it owns producers?
It's owning the metal.
Okay.
The problem with the actual companies is that platinum is made in 3 countries: Russia, South Africa, and Zimbabwe.
Oh. So
you can buy Amplats, that's Anglo-American Platinum,
okay,
which I own personally, not for clients. The Platinum ETF we own for clients. So I own that personally, but most of their production is in South Africa, but you never know what you're going to get with South Africa. But it's a way to play it if you want to do it at the company level.
What's the contrarian play for people that want to have exposure to a sentiment shift about China? You want to buy U.S. companies with a high percentage of sales there?
That, yes.
Okay.
And also,
casinos?
Isn't it
I
just
love
easier,
the
though, to buy
casinos.
the Chinese internet stocks?
The Chinese internet stocks, yes. You can buy one of the ETFs. I like the casino stocks. The interesting thing about the Chinese economy, where everyone's so down on the Chinese consumer, the Macau numbers are basically back to 2019 levels.
Yeah.
You're talking about 6 licenses, so there's really no new. They're competing with each other. It can be promotional at times, but there's a unique asset, and the Macau government is making a big push to make them the Vegas of Asia and not just tap into that mainland consumer, but tap into that entire region of potential gamblers. And a lot of Asians, particularly in China, they love to gamble. And so I think that's exciting. AIA Group is another one. That was the Asian insurance company division that was spun out of AIG when AIG went through their bankruptcy in 2008.
Oh, wow.
It was the Hank Greenberg's Asian business that he grew over decades when he was there. So it's one of the largest life insurance companies in Asia. Well, you're growing wealth in China or India or Malaysia or whatever. Well, you need life insurance for your family. So to me, that's another way of sort of playing that.
Have you always been a contrarian-minded investor, or did you adopt that as your investing philosophy somewhere along the way?
I just tried to find things that was sort of off the radar that would eventually come onto the radar.
Yeah.
Because if it's off the radar forever, you're going to be stuck in a stock that does nothing.
I'll give you the biggest contrarian play there is for 2025. You can't find anybody who wants anything to do with this. Probably why it's going to work. I'm not putting this straight on because I don't do this. International clean energy. Name one person who wants anything to do with, in the Trump age, wind, solar. You look at these stocks, one's a bigger piece of shit than the next. Here's a ticker. You could just follow this like an index. BlackRock has a product, iClean.
Oh boy.
All right, dude.
Ooh.
That has a lot of international companies within that.
It's U.S. and international. Largest holding is for solar. What's the
Enphase Energy was a stock that I pitched back in the day. That worked out really well.
Listen to me. iShares Global Clean Energy ETF. I was looking at this the other day.
What are some of the names?
You know
in it?
why? Not because I'm looking for investment opportunities. I'm looking for what the hell isn't going up? This is literally the absolute worst thing.
Yeah.
Not this ETF in particular, the theme. First Solar, Iberdrola, which is Spanish.
Spanish, yeah.
Okay. Enphase is in there. I'm trying to pick out names that people know. They have things like China Yangtze Power, which
I don't even know any of
that's
these names.
4% of the fund. It doesn't even have a ticker symbol because you can't trade it. Orsted, Next Tracker, Equatorial.
Sunrun and Plug Power. We know those.
So the point is, these stocks, all of them, look exactly the same.
You feeling strong, Peter?
So
that's interesting to look at.
Hold on.
Because we know there's still a lot of money being poured into it.
What do you think the 5-year cumulative total returns are?
Well, I'd say it's definitely down at this point.
Negative 44%.
Wow,
Go find anything. And the closest one to it, QCLN, is First Trust NASDAQ Clean
solar.
Edge Green Energy, down 45%.
Gross.
The Global X Wind Energy ETF is down 52%. The First Trust Global Wind Energy is down 23%. I'm giving you guys 5-year numbers.
Well, this is also an investment lesson on the downside is when the government gets involved in your business and they want to be your quote unquote partner through tax incentives or whatever, you have to be careful because if your business can't make money without those tax incentives,
subsidies, then they go away.
At some point, your business just can't make it.
Yeah.
And it all sounds sexy for a while when the government was so involved, and now reality strikes.
I want to show you 2 charts, Peter, on China that you were talking about China. The first one is showing we said the market is not the economy. China's the poster child for that. So we've got Chinese GDP, this is from JP Morgan, Chinese GDP versus China earnings and the stock market in China. And we know GDP is doing great, but the value has not accrued to shareholders. Here's one more great one. This is Chinese equities. This is also from JP Morgan. It says Chinese equities are pulling away from EM ex China. So what we're looking at is the correlation. It's a 15-year, so it's pretty zoomed out, of the emerging markets versus the S&P, which is rolling over. Emerging markets ex China versus S&P, also going down. But the most interesting thing here is EM ex China versus China, and that has crashed. And the story used to be that China drives all of the activity in emerging markets, both economically and also on the stock side. And that has
bellwether.
Yeah, that story has dramatically changed over the last couple of years.
That's an interesting point. That Chinese equities were not always as big within the EM indices as they became. Very politically, they lobbied MSCI. They thought they should be bigger. They wanted to get foreign flows into Chinese stocks.
And the market caps were deservingly
They were big.
Yeah.
And then they did the Shanghai Connect, where they enabled mainland investors to invest in Hong Kong and vice versa. Then we had that moment where they had like a stock market bubble on command was interesting. What
Yeah,
year was that?
Back in 2015, I
15?
think it was.
And then this summer, late summer, early fall, they had this moment where they came out with all these reforms, and David Tepper got all balled up.
Yep.
Nothing works. These
It never-
stocks are
it-
constantly for sale.
Right. There was no follow through. Their two biggest problems outside of the politics, of course, so I'm talking economically, is the distress in the residential real estate market and the excessive debt at their local government level.
Right.
Where I've seen estimates they have set $2 trillion or $10 trillion or whatever it is at the local government level. And the country is focusing on addressing both of them. The housing market has been in distress for now multiple years.
Why?
Of the dramatic overbuilding, the over leverage. But
So when you say under stress, prices are under
prices
pressure.
and the developers, countless developers that have gone bankrupt,
Okay.
which is actually interesting because here's the so-called communist country, but they didn't bail out the developers. They said, you took on too much debt, you're going to go bankrupt. Whereas here, back in 2008, we were bailing out banks left and right.
That's true.
So they sort of
Which
ripped
was the right approach? Looks like the bailout was the right approach.
well.
I know you're a libertarian, but like, quite frankly, our recovery versus theirs.
Well, the issue that I had with the 2008 bailouts were how selective it was. Washington Mutual, they were let to go. Lehman was let to go, but when we bailed out these others, it was like randomly who was saved, who was not.
Well, Bear Stearns
But
famously
that the
got
bondholders should not have been bailed out, which they were. The equity holders got crushed, but the bondholders were made whole in all these situations. So it was how
to
they
your point,
did it.
Bear Stearns famously got punished for not stepping in during 97, right? They didn't come to the table and the Fed said, all right, we're going to let you go under. I mean, isn't that what happened?
Yeah, there was an attitude towards Bear Stearns going into that for sure. So I do think that China is addressing this overhang of residential real estate. In fact, from the existing home market, you have the new home market, you have the existing. The existing is actually doing better because people don't trust a builder building something new. They'd rather just buy something existing.
Oh, that's
so
interesting because they don't know if the project will get finished.
Exactly. So the existing home market's doing better, and you're seeing a lift in the number of sales. I think if you see home prices in China stop going down from a wealth perspective, since Chinese people have a lot of wealth tied up in their real estate holdings, that can stabilize consumer spending and all these consumer needs. I'm only interested in playing the Chinese consumer.
Yeah.
That's it. Because the next 10 years, China's middle class is going to go from 300 million people to 600 million people.
Yeah.
And I just want to tap into that, nothing else. So if home prices can stop going down, China stocks can finally potentially work.
So here's the push and pull between international stocks, which we're going to get into, and U.S. stocks. JP Morgan has this great chart showing that it says China offers a more attractive cyclical starting point in terms of valuation. But we forecast a lower return on equity, indicating a lower quality market. So we see U.S. large cap return on equity, obviously at the top. These are the best companies with 19.5%. Next is Taiwan. And all the way at the bottom is Hong Kong and China. So the question is like,
Wait, what is this?
It's
Our return on
return on
equity
equity,
forecast.
yeah. So let's just say that this is, whether it's like 100% accurate, it's a forecast, but still, these are directionally correct. So the question is, are the valuations, the discrepancies that we've been highlighting for literally the last 10 years, are they finally at a point in time where investors have, you can't even say a margin of safety in China, but like, is it worth it?
Is it cheap enough?
Why is the ROE so low
Well,
in
keep
Korea,
in mind-
China, and Hong Kong?
A couple things. Well, in China and Hong Kong, those indices include a lot of state-owned businesses
Okay.
where the returns on equity are probably under 5%.
Because they're being
Separate
used
from-
as political tools to.
Yeah, the profitability is not necessarily the main concern.
Right. Okay.
Whereas, Alibaba and Tencent and those others, their ROEs, I wish I had this X state-owned. Because interestingly enough, in China, about 80 to 85% of the employment in China are for private companies.
Yeah.
People think it's just this state-run economy. China's economy is mostly run by private companies. Now, with Korea, they have the whole conglomerate issue
Right.
that lowers
They're
the
inefficient.
ROE.
They're inefficient businesses.
Exactly.
Yeah.
The interesting thing on Japan is that 9.5 used to be mid-single
and
digits.
that's on
That's
its way
creeping
up.
So
That's
Josh,
right.
Josh has
Yes.
talked a lot about Japan sort of adopting some of our business policies. Why hasn't the rest of the world done this? Is it a cultural thing? Is it a like?
Well, South Korea is actually beginning to, where Japan said anybody who wants to list on, I think it was either the Topics or
The
the
Nikkei.
Nikkei, said you need to raise your book value above 1, or else we're kicking you off our exchange.
Your price to book value. Not only do you have to raise it, you have to submit a plan, and we're going to put it on the website of the Nikkei. This is how this company is going to increase shareholder value. And the companies that did it saw an immediate lift in their share price.
Right.
This is real shit.
Yeah, they shamed companies into acting after not caring for a while.
Right.
And that was now South Korea is trying it, but they still have some issues with how they tax inheritance and capital gains and whatever, and the Scheibel conglomerate thing.
But Peter, I do think it's cultural. And I listened to Jeff Bezos on stage last night with Andrew Ross Sorkin, and Jeff was saying Americans are crazy. This is a country where you can raise $50 million in seed capital, and you can tell the person giving you the money, there's a 70% chance this is not going to work. Because that's how he built Amazon.
And you'll still raise it.
He sat across the table from people and say, this probably doesn't work. And they still gave him the money. That shit does not happen in Europe. I don't think it happens in most of developed Asia.
There will never be a country like us.
So, but that American exceptionalism thing, and here's why I bring this up to you. The reason Andrew Ross Sorkin asked Bezos that question is because that theme was the undercurrent of the entire day's worth of programming at DealBook, because this week started out with yet another Financial Times column by somebody saying, we're giving American companies way too much credit with these multiples, and we're giving the rest of the world too little credit, and this American exceptionalism thing has been overdone. I've read that so many times. So that's why he was asking him that question. But I'm just saying, like, where else could we do the things that we do other than here?
Nowhere else. But keep in mind, though, Amazon, Microsoft, all our great businesses rely on the rest of the world for business. They need a vibrant customer outside the US. They need a healthier Europe. So while we're sucking in all the investment dollars, you know, some of these tech companies, more than half their business is outside the US. Coca-Cola's business, 85% is outside the US. So yeah, we're the best country. Exceptionalism will always be here. We'll always have a high, I laugh when someone says, oh, the US market's more expensive than everybody else. It's always going to be more expensive than everybody else. It's just a matter of what that spread is going to be. And we know, we've been doing this long enough.
Yeah.
To be a successful investor internationally is sometimes all you need is the PE multiple going from, 12 to 15.
Yeah.
But there's got to be a catalyst for that. It's not just going to happen for no reason.
Right. So here's my other concern with the U.S. market that maybe is a catalyst, and I don't know. So with these Trump, and I'm going to tie this all together, with the expiring Trump tax cuts, it's from a budgeting perspective, he needs to find $4.6 trillion of offsets over 10 years. So call it $460 billion a year.
Needs to, why?
As part of the budget rules, if you're going to extend or try to make permanent the tax cuts, you have to have pay-fors. So he's got to find these pay-fors to offset it to meet the budgeting rules to get it passed.
To get the extension at a minimum.
Exactly. So the question is, where do you get these pay-fors? Now, I hope that, the whole Doge thing helps to save money, and maybe we can use that for some of the pay-fors. My worry is
don't put a lot of faith in that.
My worry is that if Trump uses tariffs to so-called raise money to use as pay-fors to extend the income tax cuts. Because there are multiple ways for you to use tariffs. He can be strategic in saying, well, I'm going to punish China tech and their military, and I'm going to keep certain things from them, or if they want to buy it, it's going to cost them a lot more. Or I'm going to try to protect U.S. industry, like steel and aluminum, because we need a steel and aluminum industry, even though you end up hurting all those that use steel and aluminum.
We tried that. It didn't go well.
It didn't work. Or
they said, you tax our steel, we tax your grain, and then we end up spending money in subsidies to make people whole. It doesn't go well.
And all the users of steel, it costs them, they shed more jobs than steel companies created because of their higher cost of materials. And then the third thing is we want to encourage companies to reshore here. That's another use of tariffs. The fourth one, which I'm worried about, is for these pay-fors, is they just slap tariffs on just because they need to raise tax dollars to sort of make the math work. And if it's just a scattershot tariff thing on China, on Europe, whatever, just because they need to bring in revenue to pay for the extension of the tax cuts, that's a situation where I think the market is not prepared for. Right now, the market's saying, oh, he's just using it as threats.
That's the new the new consensus
and
is
he's not going to follow through. But Peter Navarro just got rehired.
Yeah.
And the guy who replaced Lighthizer, Jameson
was
Greer,
was his deputy.
is basically Lighthizer 2.0.
Yeah.
So I think these tariffs are coming. I just waiting to see how it's sort of laid out and is it going to be strategic or we need to raise money.
It's not going. We already know the answer is not going to be strategic.
Right.
He said last week. He said, if Mexico doesn't close its border to the immigrant trains coming up from South America, if they don't close the border, 100% tariffs. That has nothing to do with the economy.
Right.
That's literally, I'm going to use tariffs as punishment against other countries who don't abide by my foreign policy. That is not economic tariffs. Has nothing to do with job creation.
Well, that's what I'm afraid of.
But nobody thinks he's really, but the point I'm getting to is nobody actually thinks that any of that's going to happen.
Well, the market doesn't.
Right.
No.
The market thinks that it's just threats.
Yeah.
But if the House Ways and Means Committee says, Donald, we need a lot of revenue or spending cuts to offset this, he may use the tariffs as a fundraising thing.
Pay for it. Yeah.
And if it's a fundraising thing, it's going to be not well thought out. And that's what I'm worried about. And if with China still owns what, $900 billion of U.S. treasuries.
Who is that a bigger problem for? U.S. Owners of U.S. stocks or owners of international stocks? Or probably both?
I think it could be both. I think it could be disruptive to the treasury market in terms of inflationary worries, even though people tell me, oh yeah, it's just a one step up level in price, therefore it's not inflationary. Tariffs to me muck up. It's like mud thrown into the gears of business.
This is the orange swan for 25. If he really wants to do this.
That's like the way you said that, an orange swan, yes. So hopefully it doesn't happen, but that's, if I'm looking at what the risks are, if I'm trying to watch what can hit me behind, that's one of the things that if they use it for just a fundraising thing and they think it's a piggy bank, there's a lot of risks there because we're not prepared for that.
Can the U.S. outperformance continue forever? I want to show you a chart. John, chart 3, please. So we've got the 1, 3, 5, 10, 15, 20-year annualized performance spread between the U.S. and different geographies, emerging markets, international, developed, et cetera.
Oh, this is the degree to which these markets are underperforming the S&P 500.
Correct, on an annual basis. So the only one that's not negative is there's a little 3-year period where Japan stocks from the point of a U.S.-based investor has outperformed. Can this continue indefinitely?
Well, keep in mind, in the 1 year, a lot of that outperformance is the S&P multiple that has obviously gone up a lot. So earnings are up, 7-8% estimated this year, 9%, but we're up 25%. So there's been obviously multiple help there. Getting back to my previous point, a lot of these big U.S. companies need a healthy global economy. We have customers all throughout the world that they need to be healthy enough to buy our products. And so you need all of us to be
here's the flaw in that logic. United States consumer needs the stock market and the single family home market to hold up price-wise
100%.
in order to spend. These stock markets don't fucking matter to the people who live in these countries.
No, I agree. I'm talking about economically, they need to have the income to buy our stuff.
But so that they already have it. So in these economies, they consume goods from U.S. companies. U.S. companies earn the profits of that. Stock prices go up. It doesn't work the other way. It's not like all of the consumption of these overseas markets, whether their economy is good or bad, the stock prices don't really matter. They don't really reflect it.
Well, here's some instances where it has. You take Estee Lauder. In full disclosure, we own it.
EL.
Yeah. This is a stock that's gone from $370. Now it's about $75 to $80. It's fallen. It fell 80% from high to low.
Whoa.
And a lot of their trouble is, yes, self-inflicted, but they did a lot of business in China. They did a lot of business in Asia. They were very reliant on travel and the duty-free shops that the Chinese consumer spent $250 billion a year in 2019 in international travel, whether it was going to Fifth Avenue or going to Champs-Élysées or going to, Oxford Street in London, they spent a lot of money. Well, the Chinese consumer pulling in was a major hit to Estee Lauder's earnings.
LVMH too.
LVMH also.
Yeah, everybody felt it.
There is a reliance that, and that's why Q4 earnings, when we hear them in January, February, it can be really interesting to hear what a lot of these multinationals have to say about their European business, also with the strong dollar against the euro. That will be really interesting to hear what they have to say, because we still need, for these multinationals, that growth. And even, I also look at it domestically. So, one of the things that was so interesting about markets was obviously the outperformance of big versus small. And people would just say, well, that's because, big companies are great, they have great balance sheets and so on, which of course that's the case. But who's the customers of Microsoft? There's a lot of these small businesses that start a business that use the cloud service, and every seat they hide, they get Microsoft 365.
They can't go off the cliff and have large caps keep going up.
Yeah, I mean, we all breathe the same economic air, and you can't have such a huge differential. The great thing about the market, though, and I wonder if this is the relationship, is that in July, the market finally woke up and said, you know what? There's another 493 stocks out there in the S&P.
Yeah.
There's another 2,000 stocks in the Russell. It's not just 7 names. And I wonder, because I look at Microsoft and Google, I felt like heading into the second quarter, so July, when they reported, was up until that point, anything related to AI went up, whether you were a spender on AI or you were a receiver of that spend,
right,
like NVIDIA. I felt like the second quarter, the market started to ask questions. Well, you guys are spending $15 to $20 billion a quarter. When am I going to see an earnings benefit from that? And if anything, because you're capitalizing these costs, your depreciation expense for the next 20 years is going to be very elevated. And I felt that those were fair questions to ask of Microsoft and Google and Amazon and Meta, even though Amazon and Meta, their outside business has been doing so well that they were able to mitigate it. But that's when the market started to say, you know what, there are other stocks out there.
Yeah.
You're going to love this from ChartKid. The second half return of the S&P 500, 11.8%. The average stock of the S&P 500, 13.7%. This hasn't happened in a while. And
that started mid-July, third week of July, when big cap tech reported earnings. And so I think that's a positive, but it's a realization of...
Nick Cole has made the same point that you're making, and a lot of people are saying, if the question is, well, if large cap companies are so great, small cap companies can never catch up performance-wise, well, no, they almost have to, because the only justification for the amount of money corporations are now investing in AI is that it's going to boost their earnings. So the next leg of the AI trade might be anyone but the AI companies. It might be all the companies that are now saying to Wall Street, in 2023 and 24, we bought all these subscriptions and licenses and data center, whatever.
So what? Look at our productivity.
And now look how much more money we make because we actually are. Benioff made the case. I don't know. Did you hear any of the Salesforce stuff this week?
I read. I mean, I couldn't get through his 7 pages of his beginning, but I did go through his comments on Agentforce and.
Well, you only need to hear one thing. He said he launched this brand new concept. It's not really brand new, but it's introducing digital labor. Okay.
Right. The Agentforce.
Agentforce. It's a big deal.
What is this?
Digital labor is, we're not replacing your employees. Your employees are no longer doing the menial stuff that nobody cares who does it. That's what Salesforce's version of AI is. It's let's take your existing employees and automate 50% of their tasks.
So I wonder if we're going to see that in the financials.
Well, that's my point. That's how small caps work. Next year is one after another. They beat on earnings. They surprise to the upside. And why?
Margin expansion?
It's the users of this technology.
Right.
It makes their business better and more efficient.
So that's viable.
Because when you think about now the companies, the Metas, the Microsofts that are building the models, well, those models are going to be commoditized.
Yeah.
And are they going to see the benefit? I mean, I'm hearing...
Well, now there are 6 of them.
Right. It's all going to be the same thing. It's all a commoditized product. It's going to be the users of the technology that are going to be able to monetize and benefit the most from it, not necessarily the sellers of that.
Can we do it? Can we do a little AI deviation? Because this was a really big week for AI in general. Did you pay any attention to the AWS stuff? Any of the headlines coming out of that?
Yeah, I did see it.
The vibranium chip?
They did two things very effectively this week. In addition to Jeff Bezos talking to Andrew Sorkin, the day before was AWS reInvent.
Right.
Okay. They did two things that I think should get everyone's attention. And this is Jassy, not Bezos. Number one, they launched their own foundational LLM called Nova. There'll be 5 levels. There's like a starter level, which is just, text only. Then it goes all the way up. Nobody thought they were going to have their own foundational LLM because when ChatGPT originally came out, internally at Amazon, they looked at what their own chat was and they said, oh,
it was clearly inferior.
We're way
Right.
behind. So if you remember, they said, okay, our strategy is called Bedrock and it's a BYO LLM. So if you want to use ChatGPT, great. Bring it into the AWS environment and you could, okay. They just completely reversed that. They launched Nova is their own foundational model, which the implications of this are all these companies that have invested all this money building LLMs, their customers are already sitting at AWS.
Right.
Okay. AWS, if they can demonstrate that Nova hits all the same benchmark levels as Claude Sonnet or ChatGPT 4.0 or any of the others, there's no reason why a customer necessarily will prefer to use some other LLM unless they've already standardized on it. So that was, to me, a little bit of a wake-up call. Whatever valuation you're building into Meta and Microsoft because of the OpenAI partnership, maybe rethink that.
Yeah, and I guess that explains why Google and Microsoft are well off those July highs.
Yeah.
Where Amazon is at a record high.
If you thought Gemini was just going to be run away with it, or if you thought OpenAI Microsoft combo was going to run away with it, okay, Amazon is now playing at the foundational level. 2, Trainium. The Trainium 2 chips are now competitive with H100s at NVIDIA. Whatever valuation you're baking into NVIDIA as having this level of market dominance for the next 2 years,
the moat's a bit smaller.
maybe rethink that. They said Trainium 3.0 comes out next year, will be 30 to 40% more cost effective than 2.0. And they brought on the head of AI and machine learning from Apple to promote Trainium chips. Apple says they're already using Trainium for search and some of their services. So,
Okay, so if you're
NVIDIA now
long
has a
NVIDIA,
competitor.
If you're long NVIDIA here
Yeah.
and you've had big gains, these are real serious questions you got to ask yourself of, it's almost the game of chicken because each quarter, you don't know when is that quarter where NVIDIA says, because of the heightened competition,
It's coming. ...
It's here. You're right. It's coming and it's
And do you as a shareholder, what do you do
Right.
knowing that is coming your way?
But also, is Amazon being re-rated this week? Is it a GPU company now? John, put that chart up. Look at this breakout on Amazon.
But are these GPUs, are they going to be just using for themselves, or they plan on actually
Their
selling it to
customers
others
will use
as well?
them on AWS.
Right.
But that's
Right. So more localized models.
But this is compute. They're building clusters of 100,000 of these
Right.
chips. This is compute that would otherwise be money spent with NVIDIA, is the point.
Yeah.
Now, of course, they'll all say, oh, we're all partners and we love NVIDIA. Obvi.
All competitors.
But if they can do what NVIDIA does cheaper and the customer doesn't care, it's a different story.
And it's an enormous amount of savings.
This is the Amazon breakout this week. This is a re-rating of Amazon as now a serious, my opinion, provider of AI foundationally at the LLM level and technologically at the GPU level.
Right.
This is a different market in 25 now that you've got competition for NVIDIA, competition for OpenAI coming from a company like Amazon that has all the customers already sitting in their cloud.
Yeah, and if you can overlay that against Microsoft, you can see the clear differential
Mhm.
in stocks over the last couple of months.
I thought that was a really interesting development, and it didn't get a ton of attention on Wall Street, but the stock price is definitely reacting
Yeah,
to
I
it.
was reading about it in the journal today specifically, yeah.
Josh, you were talking earlier about the benefits of AI for
Yeah.
other companies potentially
I
showing
believe
up.
it's pronounced AOI.
AOI. So JP Morgan says, this is not with AI specifically, but they said as the benefits of technology accrue to the wider economy, we believe the concentration of large tech names in indices will naturally moderate. This is similar to the dilution of index concentration that happened in the 1950s and late 1970s, when important technologies ultimately boosted earnings across many industries, allowing other sectors to catch up to the trailblazers.
I love that. Where's that from?
This is from JP Morgan's 2025 Outlook.
So maybe we've seen a dress rehearsal the last couple months of that.
Well, if the 493 are going to spend at the levels they're spending on CapEx, and they're going to be handing over this much money to the cloud companies to do AI on their behalf, there has to be an ROI.
Absolutely. I think it's even Amazon acknowledged it'll take some time for a lot of their customers to sort of figure out how best to use these AI products, but it's still going to happen.
Yeah.
It's when they'll be able to realize it that shows up in their own numbers.
One of the most crucial differences to me between the Internet 1.0 and this, Internet 1.0, it took a while, but once it finally started to work, it was a revenue growth story. This one might be a margin expansion story, not a revenue growth story. Some of the best use cases for AI that we're hearing now from Fortune 500 companies are more related to how much more efficient their operations are becoming and how much less they have to spend on employees. That's not the same as, oh, we'll open an e-commerce store.
Agreed. One of the most interesting lines from Microsoft's second quarter earnings release is Nadella said, at the end of the day, AI is just software.
Yeah.
It's what it is.
Yeah.
But it makes software better, which makes companies more efficient. They get to do more relative to the previous version. The new Apple iPhone is an improvement on the prior one. That's what technology has done since the history of the world.
Do you think the AI bears are going to look ridiculous?
Well, when you say AI bears, it depends. Because like I said, you have the spenders on AI. You have those that are receiving it, like NVIDIA and the infrastructure people. And then you're going to have the users of it via tools or in their own software
what are the AI
that are going to benefit from it. So
what are they bearish
there are
on?
multiple.
I think the most consensus bearish opinion on AI is that the revenue will not show up.
Like, in other words, all this spending is going to be a
spending.
bust.
Yeah.
Yeah.
Well, look at Copilot.
Is that still possible to believe?
Yeah, I think so.
Yeah.
Yeah, I think
Because if
the
it's
jury's still out
becoming
on that.
commoditized and Meta's giving it away for free, why are you going to pay for Copilot if you can get it for free from Meta?
They're giving away Llama for free. They're not giving away the compute.
Right.
You still
but
have
if,
to pay the cloud provider.
Right.
to
There's still a
carry
cost
this
there.
out.
Right.
Yeah.
But in terms of substantiating all the spend, I don't know. And like I said, these companies with all the spend are locking in a higher expense rate through depreciation that's going to flow through for the next, 20 years plus.
Right.
So as we wind on down the year, the market is up. What's the market? Is it a market up almost 30%? Yeah, 30%. Yeah. Unbelievable. John, chart 10, please. So this is, I don't know, the 15th best year. I'm just eyeballing it. What's interesting is that these
Wait, 15th best year.
hold on, let me just walk through this. These type of really strong years in the market typically happen when the prior year is negative. So you have a big snapback after a bear market. That's what we're looking at. Those are the blue lines. So we're looking at the best years from best to worst, and the best ones happen after 1929, for example. This is a top 10 year in a bull market. So the last year, we were up 20% last year, and we're up about 30% this year. It's pretty remarkable year. And if you consider the fact that, John, chart 9, please, the average S&P price target, this is from a guy named David Cervantes. The average S&P 500 price target in 2023 for this year was what, 4,800-ish? And we're 6,000.
Yeah.
Well, I think with this is the hardest thing to do if you're going to play this game
What game are we playing?
of throwing the dart on where the S&P will be in 12 months from now.
This is every firm, and the average firm last year was at 4,800.
By the way, Yardeni was by far the most bullish at 5,400.
And here we are at
It's-
6,100, and nobody
It's
had
like,
it.
who knows what the right PE multiple is, right? Because that's what it
Is
comes
that
down
the hardest part? Because
to. It seems that way.
I would have thought that, but then you look at this last earnings season that we just wrapped up. They were 500 basis points behind where earnings actually ended at the beginning of this quarter. They were wrong on almost every sector. They were too low. So they not only have gotten the multiple wrong all year, to your point, they also got the earnings wrong.
Well, FactSet,
Big.
I like FactSet during earnings season, they come out with a lot of these stats, like what percent beat EPS, what percent beat revenue, by what
It's always,
percent
it's always
did they
75.
beat. It's always 75.
Yeah,
I
yeah.
always say, like, just like Joe Namath guaranteed the Super Bowl win, I
Yeah.
will guarantee 75% will beat estimates.
Yeah.
Revenue is usually like 60-ish percent. But they said the actual beat rate was somewhat in line with the 5 and 10-year average relative to estimates.
Okay.
But Peter's right. You can't predict. So even though the analysts were off this year because it was an exceptional with the AI story, you can't predict the investor's mood.
And also with interest rates, who would have assumed with interest rates
So
staying
that's
high
where you and I are on the
that
same
the PE
page.
multiple would go up
Right.
as much as it did?
Right.
Nobody rational would say, wait a minute, we're going to absorb 550 basis points worth of rate hikes, and the externality of that absorption is going to be a 20% higher multiple on stocks.
Right.
Get the out of here.
Exactly.
Well, all of these things you
no one
can't
would have-
foresee. Again, without AI, the multiple would be significantly lower.
Well,
That we
AI
could all agree on.
definitely gave the stock market a second wind.
Steroids.
For sure.
Yeah.
Steroids.
Saved us.
Right.
Because just pull out the performance of NVIDIA and tell me what the market did this year.
Right.
It's like night and day. And if you want to throw Apple in there and, a few other names, it's like it's like the most, to me, it's the most pressing and urgent sales pitch for indexing. We don't know what's going to lead. We just know we can't not be in it.
So let's just take this one step further.
Yeah.
Getting back to NVIDIA. Let's just say we're about to enter that quarter where they say, hey, we had a little too much inventory.
Equal weight will
Shipping.
outperform market cap weight.
Let's hope that the baton can get passed to somebody else as opposed to
Well, look at
taking everything
financials.
down.
Financials they took the baton.
Right. That was right, because the market discovered other things to buy because everything else had so dramatically underperformed that it was due for a catch up, with only the catalyst being the question.
Well, I don't know what will be I don't know who gets the baton passed to them, but I would point out 40% rally in S&P financials this year. Probably not over.
Wow.
Probably going higher. Better than tech. So it's not as though there isn't another candidate out there ready to take the baton.
Healthcare.
Earnings
been
for banks are
dog.
going up next year. Okay.
Oh, bank earnings, right?
Yes. Healthcare, you now have $1 trillion. You now have $1 trillion in value in these GLP-1 manufacturers. There are probably going to be 5 of them. Like, they could be the new Mag 7.
Especially if Medicare starts to reimburse.
100%. And internationally, if these drugs catch on. So right now, about 20% of the population takes statins. There's only 7 million people right now on GLP-1s.
Right. Yep.
Okay. So just saying, this is a thing. And if we're all on shots and pills for the next 5 years, that could
I'm
be.
on my statin.
I can't wait till Josh gets the shots and pills. Hey, Peter,
They didn't work. I started taking them 3 years ago.
One more chart before we get out of here. John, chart 14, please. One thing that we haven't spoken about. One of the big stories coming into 2024 was what's going to happen with all the cash. Well, not to brag, but I was right. The cash didn't go anywhere. It stayed in money market funds. So the question is, what happens with this, with all of this cash? So JP Morgan has a chart showing the cumulative fall in money market fund assets in previous rate cutting cycles. So in 2001, $470 billion came out, for example, and they're showing an estimate for 2025 on the low end, $626 billion in money looking for a new home, and on the high end, $2 trillion, which sounds kind of crazy, but who knows? So is this going to, this is a big story too.
So my issue with the sort of cash on the sidelines thing is for every dollar that goes into the stock market off the sidelines, there's a seller taking a dollar off the sidelines.
Sure.
So there's always dollars on the sidelines. Only when a company buys back a share and retires it is there some money that literally comes off, that stays off. But the buying and selling, there's dollars
No,
coming
we know
in and
it's
out.
neutral, but what if there's a more
It's the
aggressive
urgency.
imbalance?
Well, that's the
Right,
thing.
exactly.
It's the urgency of wanting to get in
Exactly.
or wanting to get out that moves stocks up and down.
Not the amount.
It's not the amount.
It's the velocity.
Exactly. It's
Yeah.
how badly do you want to own it? How badly do you want to sell it?
Yep.
Now, but a lot of the money in the money market, a lot of the money in money market funds is just money out of savings and checking
Correct.
accounts.
Yeah.
That's not necessarily fresh money for the stock market. So people say there's cash on the sidelines, but there's always cash on the sidelines.
But the number does go up and down of the amount of money people leave sitting in a savings account or a money market fund or a checking account. Like,
yeah, relative to total assets, but a lot of that is because the fluctuations in the actual stock market relative to the static value of money that's in a bank account.
The last 2 years in a row, this happened in January. The year started with an explosion of cash into ETFs, and it was almost like a starter gun. I think the same thing's about to happen.
And that comes on top of the explosion that's happened over the past month of money piling into everything.
I think January, there are just people that are like, there's no pullback. I don't know.
This is going to age very well.
I don't know what else. I don't know what else to do. Just here's the money, Trump.
Yeah,
Make the number go up.
You know, I'm going to swing this back to Art Cashin as we finish up.
Oh, I like that.
You know, Art
watch the
knew
skills.
that the psychology of the stock market is different than regular life.
Yeah.
You know, Walmart became Walmart because of everyday low prices. And people showed up. New York Stock Exchange, if it said everyday low prices, everyone would freak out and never go.
Yeah.
Everyday high prices, everyone is storming the doors.
Yeah.
And, you know, he was able to what the video you showed before is, you know, talking about psychology, looking under the hood and sort of turning around what people think is normal. Money's going to come in January because the market's high.
That's right.
But in the rest of their lives, they're searching for value and discounts.
Yeah.
And the stock market's the only thing where they don't.
Absolutely.
Well, because they're not buying the stock, they're buying the return of the stock. And when stocks are high, the return looks more likely.
Right.
It's
Sentiment follows price.
an economic term for this. It's a Veblen good.
it's true.
There are certain things that are worth more because they are worth more.
Bitcoin.
Bitcoin being a great example.
Yep.
All right. Hey, Peter, we're so appreciative to have you in our orbit as part of our professional lives, as part of our personal lives. We think the world of you. We're going to try something new to end the show this week. We used to do this thing called favorites, but now we're going to switch it up. And we are going to ask you what you're most looking forward to. And you're not prepared for this. So I'll let Michael go first. I'll give you a minute to think about it.
Just
Could be anything.
generally in life.
In life, in markets, maybe there's an earnings call coming up for a stock you own. Maybe you're going to someone's wedding.
So speaking of Asia, my wife and son, the three of us are going to Vietnam
Oh, wow.
in a couple weeks. So
Why?
I'm going to scope out.
Why?
We were originally going to go to Thailand, but just the scheduling and logistics, we couldn't make it happen. And I always wanted to see Vietnam. Vietnam is this up and coming country.
Wait, why would the scheduling not be able to work for Thailand, but it works for Vietnam?
I was thinking the same thing.
One of the reasons.
You know how much more
my
sex
son-
there is in Thailand?
My son needs to be back December 30th to see fish at the Garden.
Well, I can understand
So
that.
with flights and everything, and so.
But is there a different time that you're going to Vietnam than you're going to?
No, it was some of the flights on the way back and some of this,
okay.
And how we had spaced out in different cities.
Where do you fly into for Vietnam?
You fly from Newark to Dubai, a layover in Dubai to Hanoi, and then Da Nang, and then to Ho Chi Minh City, and then Ho Chi Minh City to Singapore and
these
back.
are not all These are all flights. Everything you're describing.
Everything flights, yeah.
How long does it
a lot
take?
of travel.
A day?
So we're physically there 7 nights, and I think the travel will add a couple of days to that.
Wow. Who helped you plan this trip? Because I feel like you have to do this right.
Yeah, no, you need a travel agent to also figure out what you're going to do every day.
Well,
it's not like
AI's
flying to
coming.
London and just wandering around the city.
Yeah.
I don't know where I'm going.
Yeah.
So, you need somebody there to take you
That's
around.
a really cool trip. When are you going?
So, December 20th.
Okay.
So it'll be some of my due diligence on Asia, right? There's some
Boots on the ground.
factories moving to Vietnam from China, and
I
see how their economy's doing.
definitely want to hear from you from Asia, like what you're discovering and stuff. That's
Yeah.
great, dude. That's awesome. Love it. And when are you going to Vietnam? What are you looking at me for? What are you most excited for? Share with the group.
I'm taking my family to the Bahamas in December, and my kids
Atlantis?
are going. What's that?
Bahamar.
The water park.
Nobody goes to Atlantis anymore.
Right, I heard the
Yeah.
water park's great.
The kids
Bahamar.
my kids are gonna love the water park.
Yes,
Excited
they
for
will.
that. Yeah.
They have the best lazy river I've ever been on in Bahamar.
Ben was just talking about it. He's very bullish on lazy rivers. I don't think I've ever been on a lazy river, so I'm excited.
Lazy
for that.
river is cool when you have a drink in your hand.
Yeah.
and
did it the
you don't want to do a
Atlantis.
water slide,
Yeah.
but you want to be in motion.
All right. So what's
Yeah,
your
what are you
thing?
excited about? I'm very curious.
Oh, I don't know. Just life in general. I'm going to Mexico.
Good.
I had a couple of drug deals. I've been putting off all year. I want to knock them out before Trump.
Wait, I'll just say one more thing. I was prepared to give like a book idea
Go ahead,
based on.
hit us.
All
So
right.
I started
what
reading.
book are you looking forward to finishing reading?
I've been reading Geddy Lee's autobiography.
Come on.
I'm a Rush fan.
Yeah, no,
It's
me too.
great.
Okay. Wait,
Did you watch the Yacht Rock doc?
It's on DVR.
Okay.
Rush is not part of Yacht Rock.
I
I'm
know,
not a
just
big
music.
yacht rock fan.
You know Barry loves Steely Dan.
That's Barry's favorite
Well,
thing.
Steely Dan's good, but I'm not a big yacht rock. But
It's
Geddy
not a
Lee's.
CD. It's a great documentary. It's
okay.
fun.
Is there any like dirt on Pert in there? Because
So,
I'm a drummer, so
same. So
Okay.
I'm at the part where he just joined the band
okay.
because there's a big part of the book on his childhood. His family survived the Holocaust, so he
Yep.
gets into a lot of that. So Neil just joined the band.
Okay. I feel like I would read that. I would rather watch it, but there was a Rush documentary and it was pretty good.
Yeah, it was excellent.
When was that? Like 5 years ago?
Yeah, something like that. Before Neil passed, I think.
All right. The thing about Yacht Rock that I really
Did you
really
watch the documentary?
yeah, oh yeah.
Was it
It
hilarious?
was amazing. Shout out to Bill Simmons and everyone at HBO that made this thing. This is not my generation's music, but when Sirius XM created the Yacht Rock channel, it became a preset. And I couldn't figure out what it was that I liked about it because it's like kind of dorky. But the precision of the musicianship is the thing that the documentary really highlights. Basically, these guys from Toto were session players.
They made Thriller.
Right.
They,
oh,
like-
I didn't know that.
They played on every record that I grew up listening to in the 80s
Behind the scenes.
because they almost sounded like synthesizers. Like the way that they were able to play, and people use the term smooth to describe it. There were no rough edges. It's perfect. And there's very little digital tools back then. These were just the guys with the most solid chops, and they got their due. So they highlighted all the famous singers of the era, like Michael McDonald, et cetera.
I always
but
about
like,
40-year-old virgin with the Michael McDonald.
oh yeah.
Well, I'm definitely saying it because my wife's big into yacht rock,
It was
so
great. It was
she's
fun.
going to get me to watch it with her.
It's a very cool documentary, and it's not just about the music; it's about the impact that this has had. Now that it got classified into this goofy kind of genre, but then it became like a cultural phenomenon, and I thought it was cool to see these guys get their due. All right, that's it from us this week. I want to say a huge thank you to Duncan, John, Daniel, Nicole, Rob, Graham, Sean, Chart Kid, Matt, everybody that works so hard on the content. We did some good shit this week, right? Duncan, what do you think?
Yeah.
It's one of our better weeks.
Yeah, I think so. I mean, they're all good.
We all agree with that, but we did some really good stuff. All right, guys, thanks so much for listening. We appreciate you. Please leave a rating and review, and we will talk to you soon.